So that's why I said it's a combination of factors.
Ministries, departments, and agencies may be required to adopt insurance coverage for all FGI assets under a new directive that the National Insurance Commission, NICOM, may issue. In light of the extensive destruction of public property during the demonstration, the stakeholders who spoke at an industry event thought that both NICOM and the practitioner groups had exerted pressure on the government. The Nigerian National Petroleum Company Limited transferred a total of 2.7 billion naira into the accounts with the Central Bank of Nigeria between January and June of this year, according to a document detailing NNPC's payments to the CBN that was made public. In the document, the oil company disclosed that of the $2.7 billion it remitted to the CBN account, $645 million went towards dividends paid by NNPC. This refutes the CBN claim that the NNPC's non-remittances are the cause of the falling naira. According to data obtained from the National Pension Commission, 9 trillion naira of the total funds were invested in federal government securities, which included bonds and treasury bills. This included approved existing schemes, closed pension fund administrators, and RSA funds. The funds were also placed in other investment portfolios, which included domestic and international common stocks, as well as corporate debt securities such as corporate bonds, corporate infrastructure bonds, corporate green bonds, and supranational bonds. Partner and chief economist at PricewaterhouseCoopers, Dr. Andrew Nevin, has laid emphasis on the individual impact of fertilizer on the agricultural sector, seeing the dry season as the dry season planting as the dry season planting beckons. Farmers seem to be in a dilemma over the scarcity of fertilizer. Take a listen.
Lesson. I mean, because what we've learned is, despite the fact we have a high oil price, it's not benefiting us. So I think people have really mentally moved off this model that high oil price translates to prosperity for Nigeria. Everyone is, in a sense, moved on. So I think that's probably a good thing. But the one individual impact of this high inflation that's really hurting Nigeria is the price of fertilizer and the impact it's having on the agricultural sector. So if you think of the agricultural inputs, what I'm hearing from my friends in that sector, farmers are continuing to buy the better seeds, the seeds that have higher yields, but they're cutting back on the fertilizer just because it's unaffordable. So in the agricultural sector, we really have a twin strain because there's problems because of the insecurity. People are planting less hectarage on it, or they're what effectively I'm told is what happens is that a farmer is deciding to just plant what they can plant within the confines of the village where it's a little more secure. They're not going out to the fields to plant the larger hectarage. And the next harvest cycle after this rainy season, I think we're really going to have pressure on that. And then that's combined in the agricultural sector with the impact on the fertilizer. So that's the particular headwind that really creates problems right now for Nigeria.
Reports indicate that the National Mass Metering Program funded by the federal government, which was supposed to start in August, has been put on hold as a result of claims of fraud by the Central Bank of Nigeria against certain of the meter asset providers. The Nigerian Electricity Regulatory Commission, in cooperation with the Presidential Power Task Force, launched the program in August 2020 to allow discos to pay directly to the meter asset providers for metering on behalf of discos. 1 million meters were distributed in the first phase of the free metering program. All right, let's quickly take a break, and when we return from the break, it will be time to take you through the world markets. The Nigerian markets started trading today, the first trading day of August. We'll be running you through the numbers when we return from the break. To join us again.
Everybody knows the secret to good cooking is that special ingredient. The mothers know it. But does this new generation know it? Let's find out. Check.
Give me a Risco tomato paste. See, instead, I will give you my imported tomato. Mbano potio babu. I say that people like you, the wicked our country people. You see this Risco, They take correct natural ingredients, make them. It's not made in Nigeria, like Risco, Michiku, or Machiko tomato paste. Get many benefits. It help grow our economy. Yeah. And plentiful. Nyafo, nyafo. And when you
buy made in Nigeria, buy a Risco product.
All right, let's quickly take you through the markets. The equities market ended the week down as the benchmark all-share index declined 310 basis points to close at 50,370.25 points, while the year-to-date return settled at 17.92%, and the market capitalization ended at 27.17 trillion naira, as you can see on the board. The market bread closed negative last week, showing a total of 11 advances and 53 decliners from the previous week's trading session. On a weekly basis, the volume traded climbed by 24.5%, while the value traded decreased by 8.07%. The most traded stocks by volume were Transcorp PLC, Zenith Bank, UBA, while MTN Nigeria, Airtel African, Zenith Bank topped the value list. It is projected that some buying interest will emerge around competitively priced tickers, while the bears remain passive. If we move over to the money market, interbank rates remain elevated last week due to protracted liquidity crisis, week on week. Okay, what you're seeing now is the current trade on the floor of the Nigerian Stock Exchange, just about 5 minutes delay or so. So what we have now, 1,057 deals currently being traded, and the all-share index at 343.91. All right, let's move ahead with the money market. We saw that OBB overnight rate closed at 15%. Okay, if we take a look at the Treasury bills, last week the Treasury bills market was gloomy with sell interest persisting across selected maturities. As a result, the average benchmark yield increased by 47 basis points to 7.70% week on week. In case you missed this, the DMO, which is the Debt Management Office, sold 264.28 billion naira in notes over the week, which was exactly the amount offered. The interest rate on the 91-day and 182-day as well as 364-day notes were set at 2.80%, 4.10%, and 7% respectively, while the 364-day paper rate remained steady. The 91-day and 182-day paper rates jumped by 5 basis points and 10 basis points respectively. Analysts anticipate the gloomy sentiment will continue this week, barring any major event. For the most part, the local bond market traded sideways last week, with sell interest concentrated at the short end of the curve and purchase interest concentrated in longer dated maturities. The average benchmark yield rose by 7 basis points to 12.26% week on week, and the market is poised to maintain its mixed feelings this week. Now, despite the U.S. rates boost, we saw that the Eurobond market closed optimistic last week. As a result, the average benchmark yield fell by 36 basis points to 12.45% week on week. Analysts anticipate a bullish tilt in this week's session, although on a more cautious note, as the market awaits the U.S. non-farm payrolls reports. Last week, the Naira gained 23 basis points against the U.S. dollar, reaching 429 Naira to the dollar at the I&E window, which is the investors and exporters FX window. At the parallel markets, we've seen that the rate is hovering around 700 Naira to $1 range. If we move over to the United States, U.S. stock futures slumped after the market had its best month since 2020 as investors prepare for another week of important earnings announcement and economic data. This week, U.S. investors will have to swallow additional economic data as well as corporate profits. The European stock market opens neutral this morning after the region's market completed the month of July higher on Friday, recording their best month since November 2020. We'll see earnings from HSBC, Pearson's, and Heineken. That's their earnings today. Meanwhile, overnight, mainland China equities climbed along with most other Asia-Pacific indices as a private survey of Chinese manufacturing activity revealed a small increase. If we move over to commodities, oil prices fell early Monday as investors braced for this week's meeting of OPEC and other key producers to discuss supply changes. Brent crude prices fell to $103.34 about just a few minutes ago, and US WTI trading at $97.87 a barrel. Gold is trading at $1,768 US an ounce. All right, that's it for the market numbers. Let's quickly take a break, and when we return, it will be time for us to speak with Professor Pat Automi, who is a professor of political economy. We'll be right back.
Do you want to make your life financially free? Do you want to take your business to the next level and succeed? Then the time is now. Moneyline with Nancy presents the Personal and Business Acceleration Masterclass, a live conference geared at revealing top secrets by elite business experts and life coaches in Nigeria on ways to improve yourself, business, and create wealth. Date, Saturday 17 September 2022. Venue, Nigerian Export Promotion Council, plot 424. Agunyi Ronsi Street, Maitama, Abuja. Time, 10 a.m. to 4 p.m. To register, visit www.moneylinewithnancy.com/pabam. For inquiries and sponsorship, contact 0814-833-9088 or 0916-063-3483 and info@moneylinewithnancy.com. Don't miss this opportunity to progress.
This is Moneyline with Nancy. How vulnerable is Nigeria? What are the economic challenges that the next leader or the next administration would inherit?
Part of the strategy really is to ensure that people have money in their hands.
We also need fiscal policies and actions.
The aspiration for us is to make Nigeria a net exporter of petroleum products.
We want to steer discussion to good economic policies to the benefit of the country.
It is in difficult time that nations take decisions to be and build their country.
You either make more money or you reduce your spending.
If you waste time or you spend time, what you're doing is you're wasting your ability to create wealth.
We'll still be talking about Nigeria's problems because Nigeria's problems know the finish, you know.
Free. Do you want to take your business to the next level and succeed? Then the time is now. Moneyline with Nancy presents the Personal and Business Acceleration Masterclass, a live conference geared at revealing top secrets by elite business experts and life coaches in Nigeria on ways to improve yourself, business, and create wealth. Date, Saturday 17 September 2022. Venue, Nigerian Export Promotion Council, plot 424, Agunyi Rossi Street, Maitama, Abuja. Time, 10 a.m. to 4 p.m. To register, visit www.moneylinewithnancy.com/pabam. For inquiries and sponsorship, contact 0814-833-9088 or 0916-063-3483 and info@moneylinewithnancy.com. Don't miss this opportunity to greatness.
All right, welcome back to the program. Professor Pat Utome, Professor of Political Economy, is joining me right now via Zoom. Hello, Prof, and thank you for joining us. Good morning to you from Abuja. Hello, Prof, can you hear me?
we are in fairly difficult crisis. I mean, even the statements of public officials show how deep a crisis is. When a public official says
Nigeria and the economy of Nigeria, how crucial is 2023? Because it was James Carville, I think in 1993 or 1992, during Bill Clinton's campaign manager, James Carville, that said the economy is stupid, the economy is stupid. Do you think that it will be the economy stupid for Nigerians in 2023? And how crucial is 2023 in the life of Nigeria's existence?
Extremely critical. It's make or break time for Nigeria. We can either decide we want to be an also run country or want to rebuild. I very often, when the issue comes to this, like to give some examples from history. And very recently, I used the example of India. The foreign reserves of India by 1991, and I was visiting Delhi at the time, was down to no more than 3 weeks trading money. Technically, India was bankrupt at that time. Feed value chains that can lead to significant agro-based manufacturing in Nigeria for export. This is what we get in the Nigerian economy, really truly running away from the terrible trap into which it has fallen. Of course, in the short term, we have to go to austerity. We've got to cut consumption. We've got to make government realize that it's not business as usual, and cut is, it's spending dramatically and put money in more critical areas like education. We can't be talking about a knowledge age, and our universities are shut down for 5 months and going. Whereas the money that is being wasted in many parts of this into serving the Nigerian people, open that sector, open the critical sectors of the economy, turn to a latent comparative advantage in driving these global value chains out of our factor endowments, and the Nigerian economy will be thriving and running. But I'm afraid it needs new managers. It needs a clearance the kind of political actors that are on the stage now, because they don't seem to have any clue what they are doing, and they are disconnected from the Nigerian people. That's the worst part. When you can't feel the pain of the people, you shouldn't be in government. Nigerian people are crying, their pain is loud, and we need people who understand, who can feel that pain, and who can creatively, manage the economy in a way that the opportunities that are bound out there can come in and drive a new direction for growth. In Lagos, the Federal Capital Territory around Mushin area was the boundary from Western region, and people who were being chased by revenue officers in Western region will run across into Lagos to run free of those. So revenues, taxes were being paid. When oil began to provide revenues, we stopped paying attention to taxes. Don't trouble us. Literally speaking, government said, we don't need your revenues. They didn't say so, but that's the effect. And they just use oil revenues. People didn't bother government. So, and you know what they say, death, and taxes are the most critical, important things in life. And when you don't pay taxes, or when you pay taxes, you demand to see how the tax money is used. The Boston Tea Party in the American experience was based on that. You know, no representation, no taxation without representation. That concept comes from the fact that if I pay taxes, I want my representative to find out how you are using the taxes. So Nigerians didn't bother people with taxes. People didn't bother them with how they were spending the money. But the mindset of what government is about became sharing revenues. Fiscal transfers between tiers of government then came to dominate how we understood life. And this is why we can't even understand this question of restructuring. People think of it only in terms of revenues. You will get more share than my share. But an example I give all the time, and people need to pay attention to this, is that because we are focused so much on sharing revenues, some parts of the country think that restructuring should take away revenues that they are getting. They are, however, oblivious of the fact that the revenues they have been getting have made them poorer. Simple logic. In the 60s, the third tier of government, local governments, were not part of the fiscal transfer system. It was only the national government and the subnational, the regions. So local governments were created at the convenience of the region, governments in the south and in northern Nigeria. When by 1975-76, we moved to a system in which the three tiers of government were involved in fiscal transfers. So these revenues collected were now shared to local governments, and local governments got as much as 20.9%, 21% more or less of federally collected revenues. A lot more revenues began to flow to places that had local governments. And of course, if you had power, you created more local governments. It went to the point that of the 774 local governments that we ended up with, nearly 500 were in the old north, which used to be half of the number of local governments that in south. But what has happened, in spite of that much more new money going into the part of Nigeria, where I grew up in the north in the 60s, that part of the country has become much, much poorer. And this is as a result of what I like to refer back to as the lottery effect. If you see a poor man who has won the lottery, 5 years later, they're poorer than they were before they won the lottery.
Yeah.
And you know, economists will, you know, talk about the dimensions that lead to this in human behavior. But the point I'm trying to make is that we've become obsessed with revenues, in a manner of speaking, in Nigeria. If we produced and taxed out of the production, the kinds of issues of revenues that we have will be completely different. Is there a problem with spending? Yes, there is a problem with spending. There's a recklessness in how Nigerian government spends money. And the little example I've been using lately is comparing Egypt and Nigeria. I mean, I was at the Afri-Exim Bank annual general meeting a few weeks ago. A couple of Nigerian bankers came down from the same hotel that I was staying in. They had ordered a limo, a car, to, you know, and some Hyundai or something pulls up, and they were so upset. Is this a limousine? Well, in Cairo, this is a limousine, my friend. Just get into it and go where you're going. You go to Abuja, you can't find, there are many more SUVs in Abuja than there are in Tokyo, possibly, I don't know. You know, why are we spending the kind of money we're spending, the way we're spending it? It's almost irresponsible. See, if you have your money, you can buy as many SUVs as you want. You work for the government. You use something more modest because it is a scarce public resource to be used for the good of the people. But when everybody who holds any funny position in government has to have an SUV, the revenues, the spending of the country is so unproductively channeled that it's not an accident that we are poor. So there is a revenue problem, there's a spending problem, and so on your chain. Okay. So to try and say Nigeria's problem is not a revenue problem, it's a spending problem. Hogwash. It's both. Anyway.
Okay, Prof. Prof, and we have about 5 minutes to the end, and I wish we had more time to dig into some of these conversations, but I know that I'll have to bring you back some other time. But as we close, I would like to really have your view. You know, you've talked about how we got here, and while you were also speaking, I caught the solutions to where we are right now. But there's the issue of Nigeria's debts, which is the debt servicing right now. How would we pay the debts? How can this generation pay for what they did not utilize? Because for me, as someone that covers business finance every day, I've been doing it now for years, I find it difficult to sleep. When I reflect on Nigeria's problems, I don't sleep, let alone I wonder how those that manage it would be doing. So how can this generation pay for what they did not utilize? How do we get out of this?
It's morally wrong, but it's an obligation. But it has a very clever way of doing it. Let me tell you something. I mean, in last few days, I've spoken very, generously about the fact that General Obasanjo made a better choice when he focused on savings and the excess crude account. But I also think that they made an error of judgment in the way they paid off the old debts. You see, we had reached an agreement with the international community. Naples terms would have allowed us to spread all that money over a long period of time, and if we had a very productive economy, the real effect of it would be negligible. It would be almost like we got either money, International Development Association money, and we would have paid it all off. But somehow in the braggadocio of the moment when oil revenues went dramatically up, we chose to take all that money that we could have invested more appropriately to pay off old debts. In a manner of speaking, if we begin to show seriousness about growing the economy, the international community will respect the fact that the whole world will profit more from a prospering Nigeria, and we'll be able to negotiate Naples kinds of terms again for our debts, even though they've been irresponsibly accumulated. And if we get those kinds of terms and we're really producing, the effect on a generation that did not partake in this abuse will be minimized. But it's still a national obligation. If we are not careful, the Chinese will come and take over the place like they've tried to do in some places, literally because of the nature of the agreements that we've gone into. Compare what it's costing us to build the Lagos-Ibadan rail line, Lagos-Kaduna, 10 times what Ethiopians have spent from the same Chinese, and so on and so forth. We've got to eventually begin to bring to book all of the people who have made our country, this mess that it is.
Okay.
Eventually, we must, as a country, we can't free ourselves of the moral burden until at least history says these guys are the people who ruin the future of their children. Even if that's all that we do, it's worth it.
Prof, in just a minute, the Norwegian Sovereign Wealth Fund came to my mind, which